The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday. Tiger Technicians Hour, 877-927-6648, noon till 1 p.m. Eastern Time. Dow is up 131. What we were looking for in the Chapman Wave methodology, a methodology that I'm going to be teaching a week from today, an all-day session, 9 o'clock, amazing, 9 o'clock till 12, 3 hours, and then 1 o'clock, take a little bit of a break. I'll be around for most of the break, so any questions, unofficial questions, I'll be able to answer. But then 1 o'clock until 4:30, we are going to go right through practicing all those techniques live. It doesn't matter. You're looking right now at the chart that says daily, weekly, monthly. In the corner right here on the right is the 120-minute chart. This is the same thing. I was talking to you yesterday. You remember I said, in the Chapman Wave methodology, I've just got a potential hat trick top. I've got the, I wonder if I can go to it. I don't need to. There was a peak D in the 2-minute chart of the E-mini. There was, I believe it was a D in the 5-minute, and there was a D in the 10-minute chart, the fourth highest peak. That's what we're always looking for. I said, be careful. I'll go to it. Yeah, let's go to it. All right, if you're talking about it, you must go to it. Let me just open this up because we've just had exactly the same thing. So I want to talk apples to apples. Whoops, I went a little too far. There it is. That was 10 o'clock. There we go. So remember we had that peak E with the arch formation, scrambled all the way to 26-24 area, pulls back to the 200-period moving average, makes a cup formation, and then at 11:30 I said, oops, I think I just got another D. And that D is at with a doji candle. Be a little careful here. And then I drew in the arch for I haven't got it here. I was talking about the arch formation in the lowercase h. And if it takes out the left side low, it can go quite a bit deeper. Wow, we went from 26.23 down to the 200-period moving average of 26.15. And that was a hat trick top because I had it in the 2-minute, the 5-minute, and the 10-minute. Now let's go to what's happening right now. You know what? I think I did the wrong one. Let me just see. I didn't do a bunch afterwards. Oh, I should have had that ready. I did have it ready earlier, but it doesn't matter because it's exactly the same thing. Because we have just done a peak D in the. Oh, that was today. So today we ran up to a peak E. Then you know that pattern that I always talk about, that rectangle formation, which I'm going to teach as well. Look, 2-minute formation has a peak E and it pulls back sharply. Then normally I draw a rectangle and then I put in and I say within that rectangle there could be a Chapman Wave buy mode that takes you to a D in a shorter time frame. And it should go towards, exactly on or just above the previous high, and then you should turn down. Well, right there, it started to turn down, and it broke the support, and it slipped all the way from 26.24 level, that's today, going down to the 26.13s. Then it has a rally and goes to what? Peak A, peak B. There's the arch formation, the dreaded H formation, that becomes a successful cup formation. And what does it do? It goes to a C and a D. There's a Chapman Wave inside wedge. It goes right to the penny in time and price. And there's a little doji candle at 26.23. And what does it do? It pulls back sharply again to the 200-period moving average, the gray line, 26.15. I promised my subscribers that every day this week, I'll be discussing what I'm going to be talking about and going through in great detail Wednesday a week in my all-day webinar. Check out the front page of TFNN. You know, the cost of it is really like 1 or 2 little misses in your trading. You've got to be prepared to have some losses, and you just treat it as part of the game. And with this, you get information for the loss, for the money that you're putting up. You're getting really good information because you can use it in any time frame. Look, exactly the same thing happened in the 5-minute chart. Think of this as the daily on the left, weekly in the middle. On the right is the monthly, goes to peak D, pulls back sharply, makes that V-shaped formation, doji candle, fails, and then comes back under the 9-period exponential moving average. I'll teach you about the MACD. How good is that? I'll teach you about the moving averages. You know, I need to talk about this. I'll talk about it now. I don't believe that you can say that one thing is your golden magic fleece. This is not the way it works. Yeah, maybe you get fleeced, but I don't think this is right. If I had to say, look, you see this one green line right here? This is a moving average, but it suddenly goes pink or red, and then it goes back to green, and then it goes back to red. Well, if you're using this as your critical thing and saying if it's above, it's great, and if it's below, it's not, you can get whipsawed crazily. You need other techniques. You have to have other techniques. Well, I have. I've got the MACD. I can show you a deflection. I can show you how the stochastic will fail within a few bars to hold 80%. These are all the techniques that I discussed, and we'll go over them and over them. I want you to practice them, and then you will give me feedback. And we'll talk about entry points. We'll talk about resistance. We'll talk about why, if you've got a particular entry point and you want to add to it, sometimes you don't know where to add to it. I'll try to help you to show you where it's possible. Okay, Dow's up 140 at 24,208. Now that green line has gone positive. And what did I expect in the Chapman wave? The fourth highest peak. That's what my subscribers are looking for in all our long positions. So we've got it in leg D in the Dow. The only problem is that the S&P is only in leg C. It should go to a D before it gives you some kind of a pullback. And the way the technicals are here, I don't think there's going to be much of a pullback. What, 300 points in the Dow, 30 points in the S&P? That's no big deal when you come from 2345 to 2623. Almost 300 points in the S&P alone, almost 3,000 points in the Dow. This is really good action. There's that V-shaped pattern. Look at the Dow. I drew this in for subscribers to show them how we're measuring this, what we're looking at, where the time frames are. We went right from the left side, target area of a particular peak, and we got there. And because it was a little later, I couldn't use the exact plumb line. I'll show you which plumb line you can use, which is the middle bar that's going to take you from the left side number of bars to the same number of bars on the right. All of these things we're going to be looking at. Look at the MACD, how strong it is. Look at the stochastic at 97% in the daily chart. These are good numbers. All right, enough of that. We did the S&P. No, let me tell you, the Dow's up 0.5%. S&P right now is up 0.31, a little bit less, but a much nicer chart pattern, and it's only in leg C. So far, this is a little bit more bullish than the Dow, just in pattern. And the V-shaped pattern in the weekly chart has taken out an important high that was very important to break, and that was the high of the 21st of December, the high of 2601.13 in the S&P. QQQ right now is up. This is up 18%, 0.81% in leg D. We waited for D. It went right to the Chapman wave inside track, another technique I'll teach, and now it's being repelled at that. But the MACD is good, stochastics at 93%. IWM, the Russell 2000, is up much better, up 0.57%. I'll be right back in leg D.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. Yeah, I was just correcting something. I did this much earlier. This is not the Dow 120 minutes that I usually use. I was just experimenting with something. Yeah, it is a GC in the 120 minute chart right now. So, yeah, thanks for the correction. My eagle eye in the den. That's exactly what I've got, what you just said. So what I'm looking at here is in the Dow weekly chart. You see the way this MACD is pulled back, the red line, very, very deep pullback. See the green line, the fast-moving average, the 9-period differential is slowly turning up. You see the histograms are starting to improve a little bit. But this, to get this MACD to cross positive, you're going to have to see another, I would say 800, maybe even 1,000 points to the upside. It's going to take a while, and that's going to be a big issue. So I do anticipate that we're within a couple of days of some kind of a pullback, and we'll see. Look, the IWM, as I said, as we went to the break, IWM is in leg D, had a fabulous rally from 125.81 to today's high of 145.25, 20 points. But except it gave back those 20 points to the downside very quickly. This one, in fact, is looking much better than that. It's a much greater chance with the V-shaped pattern that it's going to try to attack the 146.70s area. That's really going to be pushing over that. I would be really impressed with it. I don't know when it's going to do it, but that would be very good. Let's go to gold. Gold is up. Now it's up 6 points at 1294.4. In that rectangle. Remember I said nothing to see here, folks. It's high-level consolidation until it breaks into the 1305 area and higher. That's going to be and then I'll probably have to renotate my Chapman wave notation here, and that'll start a leg D in the weekly chart, and then you've got 1303 is the 200-period exponential moving average target and repellent. Look at that repellent line right there. When it finally took it out on the downside back in about June of last year, May, June, and then it struggled to break above, and that was a repellent line. It became a support and then a repellent line. Now it's going to be a magnet line, saying it's going to attract gold a little bit closer, and then we might just bounce around. We might see gold bouncing around here for about another 6 weeks, going higher, going lower, just not going anywhere, but holding very well in the 12, let's say 1270, 1265, 1270 area, all the way to 1320, 1325. That's why I'm looking at it. Okay, silver. Silver right now, so gold is up 6. Silver is up 0.015, sitting on the 200 period exponential moving average, as well as the 14 period moving average. Just having a sideways consolidation, slightly lower highs, slightly lower lows, nothing to look at here. A great sideways movement after a fabulous extension from the 1460 area right into the upper 15s. And now at 15.63, just taking a little bit of a breather. Weekly chart trying to build some strength to go higher, unless in the next 2 weeks you see silver under $15. All right, next thing, closing on this. Now I want to look at the dollar. The dollar is holding okay, but just holding okay. It's up 0.02 at 95.98. Yeah, just a consolidation. That's all I've been saying. Took a little profit off our long from April. I like the dollar. I still like the dollar. I like it as a currency. I like it as an international harbinger of safety. That's what I'm thinking. Let's see what happens. In the 2 p.m. vote, 7 p.m. London. Another 2 p.m. vote, right in Dave White's hour. Hey, Dave White's doing a webinar tonight. Should be a wonderful webinar. He does terrific work. He does the mathematical formulas that I wish I could do. I've never been able to do it. And oh, there you are. They love me. They really love me. Yes, Dave White. Anyway, tonight, check it out. Dave White webinar time. And this is about about many things, but it's really discussing his 9 oscillator. So we're going to look at the dollar is doing okay right now, just consolidating at the lower end of the daily, in the upper end of the weekly, and really up the upper end of the monthly chart in this big arch formation. Hopefully it becomes a V-shaped formation. EUR USD. Euro currency pair trading right now at, it's down a little bit, 0.006. Oh man, those numbers, I hate them. 1.140645. Made a peak effort, that 200 period exponential moving average, digesting the gains. I have to tell you, the euro just looks lousy. It looks really lousy. When it eventually, and it will, starts to trade above 1.180 on a weekly basis, that'll be really good action. Until then, stuck in a range. USD JPY, I wonder where that is. Trading right now, it's just holding steady. It's at the lower end of its range at 108.81. It definitely has to hold 107. If it cracks 107 support, that's a real problem. It could do that over the next 3 weeks or so. We'll see. So I want to talk a little bit about, well, let's just finish this up, and then I want to talk about both what I'm going to be doing my webinar, all-day webinar on the Chapman Wave techniques. I mean, just the myriad of techniques, MACD, stochastic, how you're using certain moving averages, how some of the moving averages that I've developed now have the potential to keep you in a trade a long time. They can go from the daily to the weekly and then even to the monthly chart. How you can use the arch formation or the H formation, lowercase h, or the cup formation or the V-shaped formation. Just over and over, we're going to do these same things. And I'm also going to take your questions. Now, a lot of people always ask me, what do I do if this happens? What do I do if that happens? And these are the things that I'm going to be discussing. So now I wanted to show you something very important. Within the context of crude oil, it's just stuck in that lower range. Look at that, smashed to a single leg that goes from 76.90 in October down to the low in December of 42.36. One move to the downside, 3 months straight down. You don't often see that, especially in commodities. When it does that, it takes a long time to heal. And that's what I think we're going to look at here in crude oil. Let's go to the TLT should be down. No, it's up 24 cents. It was down earlier, 120.28. Let's see, 123.86 was the high on the 3rd of January. Just 4 points, 3.5 points. But it's telling me the story that money's coming out and going into equities. That's the way I'm looking at it. VIX.X. Right on the 200 period moving average. Remember, I said that's the big thing. 1772. Today's low is 1776. 1776. Not a bad year, you know? Okay. There's a great play called 1776, a musical. Very good, clever. And I've seen it done in different ways, and each time it's just very good. 16.68, up 0.08. You know, in the 18s, I'm looking for the 16s. I got a feeling before it goes to the 16s, we're going to get a bit of a spike and then come back down. Basil, would you stay in this trade? SSRM, SSRM. I got questions coming in, and I'm going to get to them. So let me just do this. SSRM is SSR Mining. Oh, you know what? I'm going to do a little work on this. I've never looked at this. I don't even know what it is. Obviously, a mining company. Trading at $12.29, up 24 cents. There was an ugly candle yesterday, but today it's not a bad candle. I'll do some work. We'll be right back. The Dow is up 150.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So we got our D and then we got an E in SSRM. SSR Mining Inc. Still don't know what it does. Doesn't matter. It's a chart. All right. We're looking at a peak E there back in October, early November. Pulls back sharply. It's the 200 period moving average. So this thing goes from in the low 8s to the 11s, pulls back to the 960s, and then it makes a peak E high. And I have to put a down arrow. Yeah, it can break above, but I still have to put that arrow purely on a technical basis. Oh, okay, so the question is, would you stay in this trade SSRM if you were long? And my answer is, I should have done the answer right away because looking at it, based on the weekly chart, the daily chart, and the monthly chart, I would just say yes. I don't know when you got in, but I would say yes. Excuse me. So as I'm looking at it, I just want to make sure A, B, C up, C1, C2. That could have been a brand new A, B, C, A, B, C, D, A, B, C. It doesn't matter. It works out either way. That the top that was just made right here, 1270 on the 11th of January, saw a pullback, big percentage terms, but nothing from where it's come to the 1181 area. And now you've got a nice candle. I'm just going to say to you, be prepared that it could pull back to the 1150s. And but I like it because it'd be a little difficult to. This moves so steadily to the upside that I'd be afraid to tell you to get out if you were in, say, in the 11s. I don't think it's worth playing games. I'm just going to say, let's say I like what it's doing. I like the daily. I like the weekly. I like the monthly. And because of it, I'm suggesting to you that I would hold on here, or if you're a little bit nervous, you can take something off and keep the rest. But if it comes back to 1153 to 1147, just give me a buzz there. Just you're in the den, just give me a yell and say, hey, let's look at it again. I like it. That's all I can say. SSRM, and I'm going to make a note of it because I'd like to do a little bit more work on it. I'll never find my book, because I think I left it somewhere. I left it down in the other room. All right, so SSRM, I will make a note right here. SSRM, I'll see the note in a few days. I'll say, what on earth is this SSRM? Okay, now I haven't had time. I'm going to do this right now because this is what I'm going to be teaching. You see these patterns? You see this pattern right here? Look, there's a beautiful trend line that you can draw. This is a conservative trend line, just going to the outer bars. And then I would automatically say, can I make a parallel line with it? And I'd go, all right, parallel. I would have preferred to have started the parallel line at the top because that's where it was going to. It kept bouncing off that. So this time when it went to an E, it failed quite sharply to break above that gray line. That gray line I'm now going to make green. And I'm putting in an inside track, Chapman wave inside track, repellent zone. And now look how much sense this makes. And these are the techniques. Look how easy. Is there any brain work that goes with this? No, it's just purely functional visuals. Here you are. There's the resistance. It failed right at the resistance. Now it's coming into an area that should be, make that red, and make this green. Chapman wave inside track, propellant or support zone. All right, we're in it right there. Okay, make that green. And you'll see the line touched this morning. And what did it do? It bounced right up. The MACD has turned down. Stochastic's now gone to 60% after being over 80%. That's not a good sign, but it's great that the price rallied. That's why I'm saying I think this candle right here is suggesting that if there's another move down to 12 or just under 12, you'll take out this low and you'll test this trend line here. And there's a good chance that you're going to 1170s. And that's going to be where you start getting the big test of how much strength is based on the weekly, which is still very good. Another technique, I just gave a lesson right there. So let's move on. The question I had was, all right, here we go. All those regular questions. Let me just run back here. I have to go back to see where they started this morning, early this morning. Yeah, I want to go back to the Microsoft question. Microsoft question, we've done now for a couple of days, had a really good spike after I was discussing it. Yesterday there was news about some linkage with Walmart, I guess, or something like that. And what I am looking at is that this is now a leg C. It's not a great looking chart, but it's improving slowly but surely. And that's what you want to see in Microsoft. I think it needs a little more time to consolidate this massive gain over really like a 60% gain over the last year and a half or so. And now it just needs some time, that's all. So it's looking much better. You were talking about options. I think it was Jason who asked me. And if you have any options, this is where it's in leg C. Question is, will it go to D? So I have to look at the stochastics at 84%. The MACD is strong. I think it could. I think it could go, but I think it has fairly limited upside now. About 100. It's at 105.09. I think 106.60s is where I start to look to say, okay. Now, question in the den. Yeah, Ameritrade looks good. Yeah, I've been talking about this, and that's the reason for my subscribers. We've been looking at IAI. We didn't have it for at 57.75, but stopped out for a very small loss. And we tried to get back in, and we weren't able to. And I've loved it. It's the iShares Broker and Dealer and Securities ETF. Spikes to 60.29 right now. Gaps up huge. This is really important. This is good. I was asked about Goldman Sachs. I love Goldman Sachs, but we have one that is much cheaper than Goldman Sachs and is giving a fantastic gain. Goldman is up 8% at 194.61, 40 points higher, 43 points higher than it was on the 26th of December at 151.70. It's come down from 275 to 151. I mean, that is a whopper of a move. Look at this candle now in the monthly chart. It is about to test the high of last month, and that's really good. So Goldman Sachs, I like it. I don't know if I should do it today, if I should do it tomorrow. If I have time today, I want to talk about the more intermediate term, and that's why I was going to do a webinar, but I'm doing a webinar just for subscribers called Anything Goes. I thought because of the title, Anything Goes, I should delay the actual title webinar and do one before that. But I'm beginning to think that the low that was made in December, I'm looking at these charts and I'm saying, if there is another move down and you've got a 50% move, say in a square, which is really part of the U.S. economy, a major sector, where would it go to? No, I think this was a pretty serious low. I think we're going to have the residual low come in higher than that low or just under it. So I'm just thinking this is a very fascinating time. Goldman Sachs is telling us. I was asked about, what was it, Goldman Sachs? Oh, MS, Morgan Stanley. Wow, what a nice move. It drops down from the 59 area to the 37s, trading at 44 now. In leg A, B, C. So some of these, like the SPY, like the S&P, only in leg C. I don't think we're going to turn down until we get to the D, and that could put the Dow in leg E. So I like this Goldman Sachs. What was the other? Bank of America. What a move. Up 7.5% at 28.54. We're in the 24s. I love the stock. We've had it many times. We've made some real nice profits over the last couple of years, and we're back in again. What a nice move. Look how it's improved the weekly. Look, it broke that trend line. Resistance, well, the day's young. And the week is young because of the weekly chart. But that is nice action to see. In leg C, a gap up, massive gap up. Look at the MACD. Look at the stochastic at 96. I like that. I love the financials moving like this. Hey, check out the webpage for my webinar coming up a week from today.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So I had, coincidentally, I had Paul right in here. Could you tell me what you think of GE? I'm seeing a breakout. And just as I was about to do GE, had George, hi Basil, just checking in. Your current thoughts on your chart of GE. Thanks, thank you. Is entry point 820 or 780? That's if re-entry or add to, I'm sorry, because George is already in it. This is what I'm looking at here. So another technique I'm going to teach right here. I'm going to go from a certain area, and I'm going to draw a line right across to the low. Then I'm going to put in a vertical line, because I call it the plumb line. Technique I developed a long time ago. And then I'm going to do this. I'm going to take the left side number of bars, and I'm going to include them. Change the color, and if you're able to change the color with your software, TradeStation has really a fantastic software package in terms of what you want to do. Okay, so there it is. I've got a plumb line in this cup formation. The MACD is just fabulous. The stochastic is good at 92%. It's the second part of an arch formation. It's the M second part of it. So the M says now it's getting a little bit tight unless it can stay flat. So now I'm going to answer two questions completely differently. The first one is, Paul, the doji candle that was made in the monthly chart from December, and the fact that it is in a left side, right side price time match to a particular candle from the 2009 March low of $5.73 to the low of January of $6.66, 6.66. I'm saying that these candles are so rare in monthly charts, either at the top, you see the top right there, you see the top at 42.15 back, I think it was somewhere around like July or August of 2007. Look at that doji. Doji candles at tops and bottoms that turn out to be reversals, even short term, can be very significant turns in a trend. The MACD and stochastic are improving in the monthly, but they're still terrible. The price is still terrible, but based on the same doji candle in the monthly at a trough G and leg B right now at the testing the 200-period moving average in a much quicker time than it broke down, 1, 2, 3, 4, 5, 4 bars to the upside, whereas it took 1, 2, 3, 4, 5, 6, 7. It took a lot more bars to get there on the way down. So I like that. I'm going to suggest, Paul, because I know, Paul, that you very often like to look at very longer term aspects. If you're prepared to have a 12% stop, something like, say, a $1 stop on an 8.84 entry point, I'm going to say to you, in your case, start a small position now. I'm beginning to like what I'm seeing technically in General Electric, We have no idea whether this new guy is going to be able to turn around. I have a feeling he's got the wind. He's got the wind. He was going into the wind. I think the wind has changed just enough for him to be able to, what do you call it, kiting? You call it when you're zigzagging along in the water. I think he's starting to zigzag towards the upside. I like it. And this cup should have produced a handle by now. And it's only just a tiny little, like a sideways trading band. It's not even a proper handle. I like it. I prefer the price that I spoke about, which was 820 to somewhere in the 780 area. I think if it goes to 820, it'll have a quick dip under 8. So be prepared for that. So that's like your dollar right there. But I would say to you, think of it as 3 stages. One is you want to start a little position right here at 884 saying, you know what, is it a fantastic move? The technicals are supporting the move. I want some news related, some bad news to take it to the 9-period moving average and then the 14-period of 842. That's where I might look at it again to add to it. Now, for the second, for George, I'm saying to you, you've already got your position. You've already got your much longer term outlook. I'm going tacking. Thank you very much, Peaky. That's exactly what I was looking for. In fact, I love the word. I'm going to use it because it's a very good market word. Tacking. All right. Of course, you have to understand what it is. Using the wind to your benefit to do at cross purposes. How about that? All right. So what we're looking at here at 884, up 11 cents. I'm saying that General Electric is very intriguing in that it's got the technical veracity that I like at turns. I don't think the worst is over, but we might find that the price worst might be over. So I'm going to say to you, Paul, nibble, and then think about adding a little bit more in the low 8s. And then if you add in the low 8s, you're going to have to, we'll talk about, let me know, because then we're going to move around your stops. You might have 2 stops. Now, as far as George is concerned, George, I think you've got your position. I know that if we're looking at, once it gets to the 10.30 area, I think it's going to be a quick run to 11, but it really has to get to the 10.30 area, and that could take a while. So I'm going to say either have patience, or on any decline here, you could start the next position that you want to add. You could even split that. I don't like to have too many positions. This makes it really confusing, at least for me. So I would go it's at 833, 883. I'd say, yeah, a drop to the 840 area, and then maybe a little bit lower, and then in the 780s. And then I think it has to hold and start its move back up again. So I'm going to say to you, George, I know you've got patience. I would have patience, but I tell you what I am going to suggest. Why don't you look at a March? You even go April, or at least a March. Call. Look at the, I'd even try to go in the money and just move with it. So it's like you've got your position, but you paid very little for it. I don't think you get a dividend with the option, but it doesn't matter. So I'm looking at it and I'm saying, you know what? You could go, if there is a 9 option, that's good, almost in the money. And I'd look at that as for March, and then it gives you a lot of time to prepare all these other things. Don't forget, I'm still expecting some really bad news situation to test downside supports, not to get to the low, but to test downside supports. Hope that helps you. Okay, a couple of questions I've got here. So there's your left side, right side price time match, and that says that it got there in exactly the right time. The target was 905, and we hit 904 within 1 penny, and it got there within 2 bars of the left side, right side price time match. And I didn't put in the Chapman Wave inside wedge target line, but the target line was right there. All right, so that all fitted in very nicely. All right, next question we've got is, yeah, so a couple of just, it wasn't necessarily directed to me, but a number of people are looking at shorting, and I'm saying to myself, you know, you had that opportunity, magnificent shorts all the way from October to November, but absolutely in December. Markets usually take a breather once they've done that. Oh, you can have quick pullbacks, 300 points in the Dow, 30, 35 points in the S&P. But I think it's higher highs and higher lows, at least for this phase of January. So I'm looking at this and I'm saying only on a short-term basis, and they have to be very weak stock. I wouldn't take the strong stocks in short term. I'd rather take the strong ones and look for entry points. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Steve comes up, and then you've got Dave White. Don't forget, Dave White with one of his great webinars coming up tonight. Can't be missed webinar. And let's see. And don't forget my webinar a week from today, an all-day webinar. 3 hours. Why did I say it was? 3 hours. Plus 1, 2, 4 is another 3, 6.5 hours of education. I'm sending out a little information beforehand with chart patterns, all that we're going to be studying in great detail. And then I'm looking at fixed charts. That is a chart like RTH we're looking at right now. Look at this Chapman wave falling X. This is the lower lows and lower highs, making an expanding cone formation, declining cone formation. And if it takes out the upside resistance, and it should, because it should go to RTA, should go to a leg D above, doesn't have to be far, but just above 99.54, and then it gets into the 200-period moving average resistance. But it's interesting because we have a retail stock, and it's done really well based on the Chapman wave methodology. And it's just gotten to leg D, but even today it's up somewhat. So I like it, and this is going to be very important. What happens over the next, I'd say, into Wednesday a week, going to be really important in the market, very important. These are questions I have. Oh, George answered. Gee, excellent idea. Thank you. Yeah, okay, George, I thought you'd like that idea because it just fits right into your framework of what you look at. And folks, when I teach, I like to look at the framework So I like a little heads up for people who are signing up to attend my course so that I can know where you are. For instance, the Chapman Wave methodology, the notation, A, B, C, D, peak A, peak B, peak C, peak D. At D, other things can happen. It can even go to E, F, and G. You get the instant restart. Hope we have a little time for the instant restart to practice it. But that's the easy part, because you don't even have to have notation most of the time, because you're looking at technicals, giving you all that extra bits of data. So think about it a week from today. Stay tuned for Steve, stay tuned for Dave, and stay tuned for, I'll be back tomorrow. Be back tomorrow at Thursday, and have a great day. Check out my opening form. We've had some really nice results, and I hope my subscribers really enjoy my newsletter. I'll be back tomorrow. Have a great day.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.